Let's now get a quick handle on what's happening in the world of commodities. Manisha Gupta is here to give us more on that. Manisha, morning.
Well, thank you for that, Sonia. I'm looking at the metals as a sector where we have seen prices continue to decline. Well, there have been some spurts where you saw some gains coming into the markets, but they definitely have not been able to sustain. I'll start with iron ore, where the prices are trading at a 4-month lows. We have seen a decline of 6% in the previous week, and there is further decline even after that fall that we've seen in the previous week coming in. It all has to do with the higher inventories as well. The Chinese inventories itself are at a 10-month high. We've seen 2% of gains in inventories on a week-on-week basis, and they stand at a tall 133 million tons as of now. It's not just that. When you look at the global iron ore shipments as well, that is at around 3-year highs. So that tells you that there is a lot of stuff moving around, but it's not getting consumed, and that's weighing onto the markets. If you have weak iron ore prices, and this is a major ingredient that goes into steel, that tells you that if the demand is not strong, that is happening with steel as well. So you have the steel prices also trading at a 4-month lows. The China home sales numbers fell around almost 34% in the month of January. And when you look at the home prices, we have seen a contraction continue into this one for a 10th straight month. So the numbers that have come in from China are all on the weaker side. So even as China has given out stimulus measures, etc., they have failed to make an impact as we see it right now. So if steel is down, that is seeing an impact on zinc then, because much of the zinc is used for galvanizing of steel. Zinc is actually the underperformer within the metal space. The investment funds have been the most bearish in zinc since 2018, and we have seen the prices decline by 8% in 2024 till time. If you look at the fund positions right now, they have been scaling their short positions. They stand at 60,000 contracts, which is 1.5 million tons of zinc itself. If you look at the markets itself, the the inventories have continued to gain up as well. The zinc LME stocks are as of now at 2021 June highs at 228,000 tons. And when you look at the surplus situation, well, last year was a big surplus itself, and markets are anticipating that for this year as well, you could be looking at an even higher surplus than previous year of 367,000 tons. And this is happening even as markets are looking at various mines going under care and maintenance. You have some of the big names like Nyrstar, Trafigura, and a big mine, also a Tara mine, also has gone in for closing there. That one is in Ireland. So even as mines are closing down, because zinc prices now are very close to cost of production, even then the prices have been under pressure because there is just too much inventory lying around the world.
Okay, all right. Thanks a lot for that. Well, let's move on.